Good morning to you, Andy, and thanks for joining us. S&P's up 40, NASDAQ again in red territory, down 10 points, basically unchanged. The mover of the day is the Russell 2000, up 3.7%, looking at those Russell futures. But, Andy, we want to come back to this topic that we've talked to you guys about, several times over the last month, and that's this idea behind the amount of mentions regarding the coronavirus and COVID-19 and the fear index associated with stock and trading on social media throughout this move.
Yeah, when we look at LikeFolio's tracking of coronavirus mentions over time, you can see pretty much that's really stabilized. I mean, it's the topic of conversation. There's not a whole lot new there in terms of the pervasiveness of the conversation. I think is pretty well known. What I like to look at, is the LikeFolio Fear Index, which is a little different than what we normally do. We're looking at investors talking about, the stock market in very negative ways, using the word crash, things like that. The LikeFolio Fear Index is a pretty good gauge of how fearful the general investor is, the individual investor who might be looking at their brokerage account or 401k on a day-by-day basis. That has been very stable in terms of very high levels and levels that we haven't ever seen before in terms of a sustained move. So I think that there's an acceptance of the coronavirus as a new reality for most of the American public. And there's also seems to be an acceptance of, high levels of fear and volatility with regards to the stock market. And that for us is an indication that we probably could continue to expect extremely high volatility levels going into next week. Again, these 3 to 5% overall market moves don't look like they're going away anytime soon.
This is an interesting conversation, Andy, because it almost feels like with a VIX resting around the low 40s that these markets and traders and investors in this market are getting comfortable being uncomfortable, right? Yeah. They're getting used to the overall big percentage moves and the new world that we find ourselves in. So I think that is really a fair assessment of what this is. Your data is showing what we all kind of think. Hey, this is the new world we live in, and we better get used to big percentage moves, a VIX in the 40s until the market shows us any different, Andy.
Yeah, I agree with that. And I think, what will get scary to me is when, we still have exceptional levels of unknowns with regard to the virus and the government response and things of that nature. But when investors start to get comfortable and you start to see a LikeFolio Fear Index really start to move lower, or the VIX move lower, those two kind of measure the same thing in a lot of ways. But if we start to see those move lower and there starts to begin to get a little complacency in the stock market, that would make me pretty fearful, unless we had some resolution with the virus. And so I think you got to look at both of those things in conjunction with each other, and I think right now we're probably in a pretty good spot. VIX 43, LikeFolio Fear Index levels at very high levels. Those seem appropriate to me, given the unknowns that we're facing. What's going to happen at the end of April? When do small businesses start opening back up? What's actually the impact of this fiscal stimulus and Fed movements? There's so many unknowns that I think it's absolutely right and rational for investors to have a lot of fear and expect a lot of volatility.
Yeah, and I love the point when we saw that bit of a break a couple weeks ago of the LikeFolio Fear Index coming off of its highs with the VIX still elevated, kind of indicating that maybe acceptance that things were going to move around for a little bit in the markets and investors getting a little bit more used to it. But neither here nor there in terms of what that means going forward, just more of a comfort around and less of a panic trade, I guess. But Andy, I know you had a bonus chart for us as well, yeah, kind of taking a look at some of the business owners looking to potentially apply for loans. Walk me through what we're looking at here.
Yeah, so we thought we'd throw out a little bonus, like you said, as we're going into this. We shared a chart showing the amount of people talking about attempting to take out a small business loan in 2020. And you can see that as of the shutdown on, essentially March 12th, March 13th, we started to see that climb. We're now seeing that at exceptionally high levels as that process starts to open up. And I think what's really going to be interesting about this as we move forward is how high do these levels stay? Because there was an initial rush to get into this. There were some problems with the rollout. To me, this is a really key indicator for the health of the economy and for how well small businesses are able to absorb these government measures that are being put in place. And I think we will watch this very closely over the next week or so as it starts to roll out to sole proprietors and other self-employed individuals. And, what we're seeing right now is there's a lot of demand for these loans, obviously. There doesn't seem to be much resolution in terms of actually successfully getting the loans. And so I think there's a lot of pent-up demand for this program, which indicates to me that there's a lot of fear in the small business community that this may go on for a really long time and their business is in serious, serious trouble. And, we've talked about it before. A lot of times the backbone of the American economy is small businesses. And, right now, I think they're rightfully kind of freaking out.
Kevin, chime in here. I know that you're always taking a look at the small business optimism index and kind of keeping your thumb on that part of the economy. Is that kind of corresponding with what you're seeing and the other indicators that you're looking at as well in terms of the fear in this space and the need for short-term liquidity?
Absolutely right. I mean, you guys know I'm kind of an NFIB geek, as I love to look at their data and look what's happening with small businesses. Because like Andy said, small business, whether you want to admit it or not, we talk about the Walmarts and the Costcos all the time, but small business is what runs this country. And if you want to keep this country moving in a forward direction, you have to make sure that small business has that bridge to get through this chasm of the next, 30, is it 60 days? Whatever it takes, you've got to get them through that. And so make sure they're capitalized or can at least have access to loans to make sure that they do it. And I know that the administration is giving loans that will be forgiven based on no layoffs. They're doing whatever they can, throwing in whatever money they can at small businesses to keep them still employing their people. So, yeah, I think this is, we talk about big business and big banks all the time on this show, but it's really, if you want to get down to the nitty gritty of what's going to bring this economy back, we need to keep the wheels of small business still turning, guys.
Andy, I want to tie this all together here. So we have coronavirus mentions. Obviously, it's still the topic of conversation, given that, it's kind of driving all of this behind the scenes in terms of, the shelter in place and business closures, at least for the time being. It's driving, that need for short-term liquidity. It's driving these moves in the stock market. It might be too early to tell, but right now indications may be showing that some of these models may be, overshot in terms of expectations and how dire things may get. It's, like I said, too early to tell. But how do you put this all together, Andy, when there's still so many unknowns out there and you're kind of tracking, what is the real effect of this with this business applications for the loans? You mentioned some fear there, at least on your end. How do you approach investing and trading with all this going on behind the scenes?
Well, look, I think that there's an extreme risk to the economy that maybe the market has not, fully digested at this point. You see the markets are up pretty good today. They obviously were expecting high unemployment numbers. They got them. But I think that there's still extreme risk in the small business side because what's happening is you've got businesses shut down. I've seen no real end of the, light at the end of the tunnel. I've seen nothing saying here's the goal, and when we achieve it, we're going to open this, and when we achieve that, we're going to open that. There's no exit strategy that I've seen with any coherence whatsoever. We just see dire doom and gloom models over and over again, and here's how much more masks people need to wear and how much more quarantining we need to do in order to control this thing that we projected was going to be so devastating. It's a never-ending story. We're always 12 days away from Armageddon. I think that small businesses, the consumer, everybody's starting to shift their focus a little bit away from, am I going to get sick from this virus? Or am I going to ever be able to work again and make money again because of the response to this virus? And I think that's a real risk to the economy. I think people are forward looking. They've been patient to this point. But when you start to see these spikes in small business loan applications and the frustrations associated with that, it makes me very nervous that there's another shoe to drop economically that right now perhaps the market is not fully counting in.